How do you know when to take a loss in a stock when it is going down? Now, as a stock trader, which I have been for the last 13 years, and by the way, stock trading is very different from investing. I usually cut my losses anywhere from 3 to 7%. However, things with investing are entirely different. There isn't really a hard and fast number that you can say, if it goes down X%, I'm out. Markets today are extremely volatile, and a very high quality company can drop 5, 10, 15% over the course of a couple days and then skyrocket right back up. So if you put in a stop loss saying, get me out of here at 5 or 10%, you might get stopped out and the stock might recover a week or two later. So what are some other factors that you can look at to better make a decision whether it's time to cut losses and move on? We're going to talk about it right now. First things first, you got to look at the quality of the company. You have to look over their whole balance sheet to see what their net income is and their revenues and their debt and their total assets and their cash. You have to look at all of those things. Then you have to consider the broader macroeconomic situation. Are we in a recession? Are we headed towards a recession? Do you think that that sector is outdated and could see losses? And could it be temporary losses or could it be permanent losses? And I know generally here in this video we're talking about losses, but it can be applied towards profits as well. I mean, let's look at what happened during COVID. There were a handful of stocks that skyrocketed during COVID. I'm thinking Etsy, Peloton, Zoom, stuff like that, where people were stuck at home and they were buying these bikes and they were buying products on Etsy, and the stocks were skyrocketing. And it was temporary because as soon as COVID ended, all these stocks came back down to reality. So if you happened to have had one of these stocks that was having explosive growth during COVID, you would have to step back from the situation and go, why is this happening? And what happens when all of this COVID stuff is behind us? The growth will inevitably slow, right? Because this was a once in a lifetime sort of a thing that was happening. Sometimes I can't get my thoughts right. The same thing can be applied to cutting losses. Every time a company's earnings come out, they issue guidance and they say, hey, this quarter was great, but next quarter is going to be really, really hard for us. And then we see things improving after that because of some short-term economic issue. Then you, as the investor, have to decide, do I want to cut my losses here and move on and then come back to the stock and revisit it later on? Or do I want to hold the stock during what could be volatile times and the stock could lose a lot of value, but I believe in the company long term. So if it does drop a little bit, I think it can weather the storm and come back. And then maybe if it does get crushed in the short term, it presents a buying opportunity. Really what I look at when I'm making a decision to exit an investment is I want to see that their revenues are decreasing, that their debt is increasing, that their cash flow is dwindling, that their net income is getting worse, or even maybe that they're cutting dividends if they pay a dividend. Those are all some of the things I factor into my overall picture when I'm deciding whether to cut a stock and move on or hold it and average down in the position if I think it's temporary and could recover. And if you're saying, whoa, balance sheets, I don't know how to do any of that, I'm going to show you right now. You are going to go on a website like MarketWatch, and then you're going to go right over here and you're going to search for any stock you're interested in. Let's do something that I don't think will do very well, like Peloton. And you're just going to scroll down a little bit and click on financials. And you can see just by looking at the sales and revenue that it was doing okay. It was doing okay. Then look at that, $4 billion in 2021. And then, it starts to drop pretty significantly. And on the same page, you can go down to net income and you can see it was always at a loss, but that loss has just gotten bigger and bigger. 1 billion, yikes. You could click on the balance sheet and look at their cash and short-term investments, and you can see that it's just getting worse and worse. Even their total assets are decreasing over time. That's not good. And their long-term debt is getting worse and worse and worse. Buying the stock here would be a humongous risk, but if you were a shareholder and you were watching these numbers get worse and worse and worse over time, it might be time for you to cut it and move that money into something else. But as always, the number one most important thing you can do when it comes to your investing is smash that follow. Hey, thanks.